Three of the big four banks now expect a rate cut next month when the Reserve Bank meets, after softer than expected inflation data yesterday that continues an ongoing downward trend. Joining us live is the Treasurer, Jim Chalmers. Treasurer, thank you for your time this morning. Is the case for a rate cut now compelling?
Well, Pete, you're right to say that the numbers that we got yesterday were better than expected and better than forecast. And what they showed is that we are making really sustained, substantial progress in the fight against inflation. I'll leave the decisions on interest rates to the independent Reserve Bank. They can make that decision without kind of free advice or predictions from me. My job is to focus on our three goals, which is inflation down, wages up, unemployment low. And Australians together have made very encouraging progress on all three fronts, especially in that inflation data that we got yesterday.
All of those 3 points are correct. And rate relief is no doubt good news. But how do you tell that to the thousands of businesses that have already folded this year?
Well, first of all, we understand, whether it's small businesses or Australians more broadly, that there is still a lot of pressure. The cost of living pressures haven't disappeared, but they are easing. We're not getting carried away by this progress because we know that a lot of people and a lot of small businesses are still under the pump. One of the reasons why those numbers are a bit higher is because we've got more businesses in our economy. If you compare the number of businesses to the total business base in this country, the rate of insolvency is actually lower than it was under John Howard and lower than the average. But we do acknowledge people are under pressure. That's why we're not getting carried away by yesterday's inflation numbers, even though they were very, very encouraging when it comes to getting inflation well into the Reserve Bank's target band.
And despite possible relief, do you concede that people are still poorer now than when they were at the last election?
Well, you asked me about how people were faring at the last election. Remember, inflation was higher than 6% and rising then. Real wages were falling, real incomes and living standards were falling then. And we've turned around the inflation story in our economy. We've got real wages growing again. We've kept unemployment at the lowest average unemployment rate of any government in the last 50 years. Now, we know and we acknowledge, and we're upfront in saying, that people have still got a lot of ground to make up in their household budgets. That's why our cost of living relief is so important. That's why it beggars belief that when it came to helping people with these cost of living pressures, that Peter Dutton opposed them rather than supported them. And that means people would have been thousands of dollars worse off if Peter Dutton had his way, and they'll be worse off still if he wins the election.
Signs are now pointing to an April election. Treasurer, can you confirm?
I can't, Pete. That's a decision for the Prime Minister. No doubt he'll have a discussion with the colleagues about that. The election's due by May. My job is to continue focusing on my job, those things that I keep coming back to, the lower inflation and higher wages and low unemployment. That's my focus. I'll keep doing my job until the Prime Minister calls the election, and it's a matter for him when he does that.